Welcome back to another episode of T2 SMC Trader. How are you all? I believe that everyone is cool. So in this video, I would love to explain how to use the fair value gap. Now, a lot of you know how to use the fair value gap actually, but I would love to make sure that your understanding about the fair value gap is correct. So here, my main intention to use the fair value gap. If you are with me in my Twitter, you have already seen the execution I took in this London session. But if you are not with me in my Twitter, no worries. I'm gonna explain the setup over there. So this is this is Monday, 24th June 2024. This is the London session, and I'm just going to the video. But before that, please don't forget to give me a thumbs up. At the same time, subscribe to my channel if you are new. So over here, you see this sell side liquidity, this low, that low. They are relatively equal lows. This sell side liquidity market left from Friday. Okay, so Friday market didn't take this sell side liquidity. That was my target in Friday. At the same time, this is the hourly fair value gap. You can see in Friday price has traded this hourly fair value gap, went lower, left this 50-minute last fair value gap, trade that last fair value gap, then fall again. When market fall, this is the new day opening gap. Below this new day opening gap, I had another last fair value gap from 50-minute chart. Okay, so just remember, this is my sell side liquidity. I don't have any buy side liquidity. I have only this sell side liquidity. Below this new day opening gap, I have this last 50-minute fair value gap, which is important to me. The reason is, if I didn't have any last fair value gap from 50-minute chart, then I wouldn't able to frame any sell setup until market reach until the new day opening gap. As I have this last fair value gap, I would love to use this last fair value gap for actually making some sell entry. Okay, so you can see market has traded this 50-minute last fair value gap constant crossment over there, then it fall. Okay, overnight it fall perfectly, then market went higher again one more time. Around the London session, market went higher. Okay, where did it reach? Until this last fair value gap from 15-minute chart, tap to the constant and constant, failed to take that high. Now if you go to your chart, you will see that market didn't take that high. So this is the extreme high. Market failed to take that extreme high. This is the London session. So from 2 a.m. to 5 a.m. Okay, so I just make a box so that you can understand. This is the session. I am only able to frame a setup inside this session. Okay, when market is going higher, you will see that market has left this bullish fair value gap. So let me mark this bullish fair value gap. This time, what is that time? 3:15. Around 3:15, market tapped to this bullish fair value gap, then went higher. Okay, when market was going higher, just look, there was no buy side liquidity. Now you can say, brother, this is the buy side liquidity, this swing high. No, I don't mark the liquidity like that way. I always look for relatively equal highs and relatively equal lows. That's my liquidity. I don't go for the swing high or the swing low. Now I'm going to 1 minute chart to make sure that you understand this fair value gap first. So around 3 a.m. this is the first time when market tapped to this bullish fair value gap from 15-minute chart. Then market went higher. Was there any market structure shift? No, there was no market structure shift. Then market trade the entry fair value gap over here. This is the entry fair value gap. This is the last fair value gap. Tap to this entry fair value gap, went higher. Maybe you will see this is your market structure shift. Okay, either way, this is not valid to me. But for the sake of this video, I'm just thinking this is the market structure shift. Even if this is the market structure shift, there is no fair value gap. Let's think that there was a market structure shift and a fair value gap. Okay, just think there was a perfect market structure shift and perfect fair value gap. Why you should take that buy? Why you should take that buy? My question is, why you are going to take that buy? Because you don't have any 15-minute buy side liquidity. When you don't have any 15-minute buy side liquidity, you should not frame the buy setup. That means this whole run you have to sacrifice. You can't take that buy setup. Try to understand this part, because a lot of you, when I do the live stream and I just let some run go, you get panic. Why I didn't participate in that run? This is the reason. From 15-minute chart, I don't have any buy side liquidity from 15-minute chart, so I'm just unable to frame a buy setup. Instead of that, I will only look for sell setup. The reason is I have this extreme sell side liquidity. At the same time, I know how the London session worked. This is liquidity making session or liquidity taking session. Okay, so when market is going higher, I'm expecting that market is going to make the liquidity. Okay, it's the liquidity making, because I don't have any buy side liquidity. Now if you see closely over here, this high and that high, now I have the relatively equal highs or the buy side liquidity. Do you understand how this London session works? London session is always going to make the liquidity or it's going to take the liquidity. So two type of things happens in London session, where in New York session market always go for the liquidity. Always means 95% of the time market go for the liquidity, and around London session 95% of the time market make the liquidity. Now if you go to your 15-minute chart, you will see this is a very clean buy side liquidity, and if you are with me in my Twitter, you have already seen that I have marked the buy side liquidity from hourly chart, that is that high and that high. Okay, so when market reach until that area to this 15-minute last fair value gap, what is that 15-minute last fair value gap? I'm going to 15-minute chart one more time. So here I am in my 15-minute chart one more time. When reached to this 15-minute last fair value gap, I was watching how it react from that 15-minute fair value gap, because previously market has rejected from the constant crossment. Now I was expecting that market will reverse from the from the low of this fair value gap. Okay, so over here the wick reached until that constant crossment, but here if you just take a closer look, it is actually reversing from the low of this 15-minute fair value gap. Just wick went until that area. Here bodies come around the low of this 15-minute fair value gap. Okay, so though the wick reached until that constant crossment, but look at the bodies over here. Compare this price action and that price action. Isn't it so clear that market is reversing from the low of this 15-minute last fair value gap? And here you can just see that bodies closed there, but wick reached until that constant crossment. So how you should use your fair value gap? Are you going to use this fair value gap for making a bull setup? Brother, it went higher perfectly, but you should not participate in that buy down. Try to understand, brother, please. It's very important, because you don't have the liquidity. When you don't have the liquidity, you just can't frame your buy setup from your lower time frame. Though you have the perfect things, whatever I told you, everything you are getting over here, right? Bullish fair value gap. After a big run, you waited for a bullish fair value gap. You got that bullish fair value gap. Price tap to this bullish fair value gap inside the session from 1 minute chart. Maybe there will be a setup, but you are not allowed to take that buy. The reason is you don't have the liquidity. Always remember, if there is no liquidity, there is no setup. I don't care about anything else. No fair value gap, just nothing. Now price tapped over there. I was watching over here clearly, because if market work with the upper portion of this last fair value gap, then I will start to think that market is reaching for the new day opening gap, and after reaching this new day opening gap, I will start to frame my sell setup. But over here, when I have seen that market is actually reversing from the low of this fair value gap, I'm pretty much sure that market is actually going lower for this sell side liquidity. I don't need to hold the trade until this sell side liquidity, but I will go to 1 minute chart and I will talk about the price action. Okay, so this is the first time when market tapped to the low of this fair value gap, right? To that specific fair value gap, price tapped to the low, and then market went lower. Was there any market structure shift? No, brother, there was no market structure shift, just nothing. Okay, so when there is no market structure shift, just nothing, do I have anything to do? No, I don't have. Then market went higher one more time, where the body closed. Look, where the body closed, brother, to the low of this 15-minute fair value gap. From 15-minute chart, I saw it. From 1 minute chart, it is much more cleaner that market is actually reversing from the low of this 15-minute bearish fair value gap or the last fair value gap. Yeah, it reached until the constant crossment, and actually if you take a closer look, it failed to tap to the constant crossment. See, it failed to tap to that constant crossment, because the constant crossment rejection happened over there. It's already done over there. This is how I'm going to use the fair value gap. If you understand this part, it's going to be very easy for you. I have seen this market structure shift. Was that valid? Absolutely, it was valid market structure shift and perfect market structure shift. Okay, that was a very nice perfect market structure shift. price has taken the buy side liquidity, failed to take the extreme high, then at the last moment market just take that high, okay, didn't make the relatively equal highs, take that high, then boom, look at the displacement. Where is your entry fair value gap? So there is your entry fair value gap. Let me mark it as entry fair value gap, and here is your last fair value gap. Okay, so that is your last fair value gap. Where should be your entry? There should be your entry, and your stop loss will cover the last fair value gap. Now if you want to put it over there, it's also cool. Where should be your target? Now if you are with me again to my Twitter, I have just marked that sell side liquidity. So this swing low and that they are relatively equal lows. So it's in my opinion that is sell side liquidity from 1 minute chart. I'm not interested to go for this extreme sell side liquidity. Instead of that, I would love to mark some kind of last liquidity, sell side liquidity from 1 minute chart. Above this liquidity, you have this last fair value gap around that area. This is your last fair value gap from 1 minute chart. So if you take your entry over here, you can just go for this sell side liquidity, but at the same time you have to take a partial to that last fair value gap. You have to take that partial. Okay, now here you can say, brother, why you didn't target over there? Because this is not sell side liquidity. Just look, there is no sell side liquidity, there is no last fair value gap as well, just nothing. I have only this last fair value gap, I have only this sell side liquidity. So I can only mark this high as my partial and this low or sell side liquidity as my target. Now what is the risk to reward ratio? It's near about 1:4, and if you just cover the last fair value gap, which is actually my rules, then it's near about 1:6. Okay, I'm going to remove this one. I would love to say you that why I wasn't in that setup. I was expecting that market will tap to this entry fair value gap with a very immediate reaction. Sometimes I actually take my entry after getting the market structure shift, but here I didn't do that. Why? Because this is the first setup from 22 YT model. This is the first setup. So here I will expect the perfection. That means market will tap to this entry fair value gap immediately. Now it takes too long to reach until that area, to that entry fair value. It takes too long. I was unable to push my button over there. I was just watching this price through my phone. I was outside actually, so I was watching this price action through my phone, and I was expecting it will tap over there within 3 candles and I'll be in the market. Unfortunately, market didn't give me the immediate reaction. Later, market came here to this entry fair value gap. How beautifully entry fair value gap hold the price, and the breakaway gap, the last fair value gap or the breakaway gap, how beautifully market even didn't reach to that breakaway gap. Then market fall again. Okay, so that was a very nice fall. I was looking for another market structure shift over there. Okay, so I would love to mark this low, too low. Lot of you will see this is your market structure shift. Okay, this is not market structure shift. This was the liquidity taken. Okay, so all of these lows are relatively equal lows, and market has taken these lows. It's not my market structure shift. So I was unable to frame my setup from that entry fair value gap. The same logic over there. I was just unable to frame another setup from that entry fair value gap, and that was the breakaway gap. Market has taken the buy side liquidity over there. Market structure shift, entry fair value gap, last fair value gap. No, I'm just unable to frame my setup from there. So I just missed that one as well. Over here, after shifting the market, it didn't reach until that area. I don't need that one because this setup is inside that setup. All was missing the market structure shift over here. So there was no market structure shift. I didn't participate in that trade as well. Finally, price came here in that last fair value gap to this line. Okay, to this line. This is the last fair value gap from 1 minute chart. When I saw that, I got this liquidity taken over there. Market has taken the liquidity. There was my perfect market structure shift over there. This was my perfect market structure shift. Okay, after shifting the market structure, I have this entry fair value gap, I have this breakaway gap. Let me mark the breakaway gap here. This is my breakaway gap and this is my entry fair value gap. Okay, this is my entry fair value gap. Now if you have watched my execution, you saw that I marked it as a breakaway gap. Okay, I didn't mark this one as my breakaway gap. Instead of that, I marked this one as my breakaway gap. Why I have marked that one as breakaway gap? Because market is now in last fair value gap, bullish last fair value gap from 1 minute chart. Now, if it closed that fair value gap, which created just above this last fair value gap, that means market is not interested to take this sell side liquidity. That means market has to be hurry or has to rush through this sell side liquidity, go through this sell side liquidity. It should not be reacted. Okay, that is the reason I was expecting market will never touch this breakaway gap, but it has touched that breakaway gap perfectly. It tapped over there, but never watched until the constant enforcement. So I got my entry over here. I was a little late because of my, in my laptop was just opening around that time, so I was a little late. I took my entry when it was around that area inside that last parameter. Okay, I wanted to push my button when I had got the market structure sheet. I was trying to push my button over there, but I was late because of opening my laptop. So I took two contract entry over there and I put the limit order over there. So if market can come back again over here, I will add more. My stop loss was above this constant enforcement and this was my target. So that was my setup. Why I was able to frame that setup as well, even from here to that last parabolic gap. First, look over here what it has done. It has closed the parabolic gap perfectly, right? Market is working to the lower part of this last parabolic gap, where here market failed to reach until the high of this higher part of this parabolic gap. But here market is working with the lower part of this last parabolic gap. Why it is important? Because I have this extreme sell side liquidity, 1 minute liquidity, I have everything. So I'm expecting this last parabolic gap is going to be broken and market is going to take at least this sell side liquidity. Okay, so that is the reason for taking this entry. The reaction sent the price until the breakaway gap, then market boom fall and hit my target profit. So that was the explanation how to use the fair value gap. Here you should not use this bullish fair value gap for framing your buy setup. Instead of that, you should use this last fair value gap from 15-minute chart as well, and also you should look how it reacted before. If it react from the high, then you will expect this time it will react from the constant enforcement. If it react from the low constant enforcement, you will expect that market is going to react from the low. If you see market work until the high, after reversing here from the constant enforcement, now it went until that high. Though you have this sell side liquidity, you should not frame your setup over there. You should not think like that way. You should think that no, maybe market is going to the new day opening gap, or if there is any other obvious parabolic gap is over there above this parabolic gap, it is going to trade that parabolic gap, because market is working to the upper portion of this last parabolic gap where it has been rejected from the constant enforcement already. So this is how you can use the fair value gap. Now this entry, I am not telling that it is invalid, but at the same time, as that was the first setup, I was expecting immediate reaction. Then this is not a valid setup because of the market structure shift. There was no market structure shift here. I was too late, but still this is valid for me. Until this sell side liquidity. Okay, and market, I believe that market is going to take this sell side liquidity, and then or maybe market will use some kind of fair value gap and it will go for this buy side liquidity which market left around the London session. So this side, that side, there are related equal highs now at this buy side liquidity. We will see around the New York session. I will be live around that time, and I believe that I will be able to explain this price action. So guys, if it helps you a lot, sorry, little, just give me the thumbs up, please. It's a request. Okay, so until the next video, cheers.